There's one major part of car insurance that makes the prices go crazy, and we all should understand that there's a lot of things that can make the prices go up, go down. There's a risk here and a risk there, and what are these insurance companies really worried about? Let's dive into this short video to go over exactly what we're talking about, the small risks, the medium risks, and then that major piece that everyone should be careful with your car insurance. The small risk is the location. That plays a big factor lately because there has been a lot more claims and companies have switched to territories. So it's no longer just I'm in a zip code and this zip code should be this price. I used to work on a phone at a call center at one point in my life, and it was the worst thing ever. And people would say, here's my zip code, just figure it out. It doesn't exactly work that way because it still needs some of those factors to figure out who you are, what your risk is, and what that zip code risk is. With most states, those territories have broken apart those zip codes, so now there are multiple zip codes in a territory. They commonly took some of the better rated zip codes and some of the worst rated zip codes, lumped them together, so they're almost sharing the cost in a lot of these insurance companies based on the state that you're in. That falls into the next part, which is the claims that you have. The number of claims that you have plays a huge factor. The state matters the most when it comes to claims because not all claims are treated equal. A not at fault claim will not hurt you in a not at fault state or typically a PIP state or a no fault state as most people call them. Where in the opposite, it will commonly count against you in at fault states. Now I get it, states like Texas is technically an at-fault state, but they have PIP. There are confusing parts that get involved, but the easiest way to think of it is if you're in a state that counts accidents against you, even not at-fault ones, then you might pay more for having a small claim. Claiming that windshield might not be beneficial depending on the state you're in. At-fault accidents play a larger factor in almost every state there is, and they amplify not at-fault claims. When you typically have a not at-fault claim, even in the states that don't count them against you, when you have an at-fault claim later on, that can pull the data from both. What most people don't understand is I may have no fault and we're good, and then I have an at-fault accident, and there might be a guideline that says if there is an at-fault accident, we can now pull the history of any claim in the last 3 years. That's the way of the insurance company saying, we might not want this risk on our books. Most people who will complain, and I'm okay with you putting it in the comments below, let me know your scenario because this does matter. But in most scenarios, they just know that. They're okay with you being upset and they're okay with you walking away because you're gonna go with a different company. And based on their risk model and their software that predicts what's gonna happen next, they know that they're never going to recoup their money in the majority of cases that they have, and so they're okay with allowing you to go somewhere else. If you're not, they're basing the price on how they can recoup some of that. They'll probably never recoup it, but it benefits them going forward to be able to at least get some of it back. You are going to shop with someone else and probably switch. I have a link in the description below if that's the case, if you are shopping around. But then in most cases, you're just going to go find something different. That's all fine and dandy. Those are your smaller to medium claims, except we're talking about this major claim that we have. What is this major occurrence that could happen that could affect everything? The coverage is called liability, but the claim is called pain and suffering. Liability is the amount of coverage that your insurance would pay for something. Let's just say that you're at fault. It's what you're liable for. That's the word. So if I was reaching down to get a pen, didn't look up, ran into somebody, their neck now hurts, and they now have to have a surgery. There's a muscle that tightened up too tight, and the next 5 years, they can't turn their head all the way. They've got almost a limitation. That's going to be a pain and suffering. They can, in most cases, go after your insurance in most states. But what happens when your insurance runs out? What do they do next? Well, they have the next step up, which is you. They must hire a lawyer, go through the process, and now you're having to deal with that issue. That follows suit with what we're seeing with some insurance companies where they're backing off and saying, well, wait, we have a limit on the liability that you can carry because we don't want to deal with the pain and suffering lawsuits. Those are the Achilles heel of any insurance company. It's so unpredictable what could happen, and the smallest claim, the smallest accident, a fender bender, could cause what we just talked about. If you ran over someone's toe and they can no longer stand for hours at a time, that is a pain and suffering issue that your insurance is probably going to pay out 5 times as much, if not more, than a common claim. So how do you protect yourself from that? It's essentially just having the right liability limits to where it makes sense. There's almost never a perfect scenario where you can account for everything. You'll just run out of money before they run out of coverage. And you can purchase what's called an umbrella policy, which is in addition to a standard policy. So if we're talking about auto here, it goes for home as well. It usually maxes out at about $1 million. Not all companies even offer that. Some don't even offer over 300,000. Just depends on the city, state, all of the things that you have. That's why when we said shopping around makes sense, that link does connect you with an agent that understands that part. But beyond that, there's an umbrella policy, or you could call it a liability policy, because it's really 90% of all it's covering is if something happens beyond your coverage. It's $300-400 a year to add $1 million, only a few $100s more to add a few more million, and the higher it goes, the less risky it is, right? The odds of you having a $5 million claim are so small that you're not going to pay that much for that additional coverage. It's really that simple. Adding what's called a PUP, personal umbrella policy, to your policy is going to help you overcome the possibility of that. But then again, you've got to sit back and say, do I even need that? What's my risk, or what's my assets? What am I willing to go after as far as the cost that it has versus the coverage that I need? That's where having the agent will come into play. I recommend talking to your local agent, getting a little bit more detail. If you do want to find out a little bit more about that personal umbrella policy, I've got a video that goes a lot more in depth there. Another great video to watch would be here that's helpful for you as well. I'm Mark with Think Insurance. I'll see you in the next one.